Well, good morning, good evening, good afternoon, and welcome to the weekly podcast called The Booms and Bust Show. My name is Jonathan Davis, and the Booms and Bust Show, for new listeners, is about free markets, about capitalism, rabidly anti-socialism, communism, fascism, all the other isms you can think of. We talk a bit about politics, we talk about economics, we talk about markets, and what we try to do is give some ideas about boosting your retirement. This is not a trading show. It's not buy this, sell that, and wonder what's going to happen over the next week or two. No, we're interested in long-term investments because, let's face it, most people are interested in long-term investments. We like to have an idea about what's going on in the world economically and markets, and I will rip apart fascism that I see, theocracy that I see. Theocracy and fascism seems to go hand in hand. I mean, it was only a week or two ago that you had the anniversary of Martin Luther pinning whatever it was, his new principles on the church wall. And if that wasn't a fight against fascism, I don't know what is. You know, the left talks about liberation and builds gulags. The left talks about compassion and commits genocide. The left talks revolution and forms establishments. The left talks equality and promotes quotas. This idea that capitalism is the font of all evil and creates poverty is absolutely, utterly ridiculous. Everything the left and the fascists say is a bunch of twisted lies. And I just wish, I dream one day that the media will actually do its job properly. I guess that's a faint dream and unlikely to happen. The BBC, there isn't an equivalent, of course, in America, but it's just such a propaganda machine. It's unbelievable. The so-called unbiased neutral BBC. Yeah, and yet you've got all these lefties, ex-Labour guys, ex-Liberal Democrats, whatever, running the BBC or in the top news and documentary sections. A focus that I've had this year, this being the last show in 2017, today is Monday the 18th of December. One of the themes that I've had this year is I've been absolutely appalled by Islamic barbarism, tortures, homophobia, misogyny, raping of children, marrying girls of 9 years old and then going to bed with them and then making them slaves. What the hell is that all about? The way I see it is, opposing Islam is no more racist than opposing German Nazism or Soviet communism. It has nothing to do with ethnicity or colour, and everything to do with a political theocratic ideology that demands submission or death of the infidel, the unbeliever, the kafar, the elimination of gays, and the submission of women, and the idiots who call themselves anti-fascists call me a fascist because I'm anti this blooming theocracy. You couldn't make it up. And then another of our recurring themes that I've had during the year is the undeniable, absolute, utter racism of anything to do with Jews and Israel. And, you know, this idea that, oh, I'm anti-Israel, but I'm not anti-Jew. Ha ha ha. Ah, right. I'll tell you what, if you are threatening a United Kingdom Channukah celebration, which is going on right now, if you even think about it, if you support it, if you're on Twitter saying, yeah, go and get them during Channukah, then the argument that you're known as anti-Israel but not anti-Semitic is, of course, a farce. And as many of you will know, I'm an avid Twitterer. This account has its own Twitter account, at Booms Busts Show. Astonishingly, there's only a few hundred followers, so that's a bit weird. But, you know, if you aren't yet following, go and have a look at Booms Bust Show. If anything, you should do so in order to get this podcast. This is a very simple way of obtaining the podcast. Just go to the pinned tweet on my profile on Booms Bust Show. And incidentally, while I'm on it, just click on the tweet, scroll down, and you'll see this week's show. You'll see today's show. Possibly one of the best tweets I've seen all year is, and I assume this is really them. I'm not 100% sure. From Mossad, which is, as anyone will tell you, basically the finest, most successful intelligence agency in the world, the Israeli intelligence agency. And on the face of it, they, or someone pretending to be them, tweeted on the 6th of December, just as America was announcing that, as I went into great depth last week, that they're moving in due course the American embassy from Tel Aviv to Jerusalem. You should listen to last week's show if you haven't done so. I got quite a lot of people telling me it was one of the best shows yet. And this is what they tweeted in its entirety. It just killed me. The Palestinians have declared 3 days of rage as a result of US recognition of Jerusalem. We're still trying to determine how these 3 days will be different from the last century of perpetual pissed offness. As I say, you don't normally expect that from an official organisation, but hey, they've got over 30,000 followers, so it could be them. I've no idea. I see it's reported, and I put a photo of two very beautiful young women there, Miss Israel and Miss Iraq, who took a selfie of each other and put it out into the social, the internet sphere, whatever we call it. Miss Iraq's family has been forced to flee Iraq over that selfie. Think about that. And also add on to your thinking that Iraq was recently elected to the United Nations Human Rights Council, obliged to uphold, quote, the highest standards of human rights, unquote. It's just pathetic. I've got an early quote of the week. Comes from a guy who lived a few hundred years ago, Voltaire. This was the same guy who incidentally said, and hopefully I remember off the top of my head, I may disagree with him, but I'll fight to the death for his right to say it. Tremendous guy. This is what he said about finance. Go into the London Stock Exchange and you will see representatives from all nations gathered together for the utility of men. Here, Jew, Mohammedan, and Christian deal with each other as though they were all of the same faith. The same faith, they're just trying to make money. in a free market. But then when you bring in the nonsense, yeah, it all goes awry. Now, I said last week that I'd be spending much more time on the markets and much more focus on the markets as a roundup for 2017 and a look forward to 2018 and beyond. And that's what I'm moving on to now. I'm not even looking at economics. Because remember, the economy is not the market. You can have the direst economy going, and in fact, the market could be about to go to the moon. Think about 2009. There was so much depression in the media, in every pundit. You saw every talking head with a tie and red braces. You saw on the telly, on the radio, in the newspapers. Everyone was bearish. Not everyone, I can tell you about that. Not everyone. But everyone you saw in the media was bearish because they wouldn't let anyone who's bullish on. Well, if they did, they laughed at them. And of course, that proved to be the beginning of one of the biggest stock market rallies ever. Never take advice from a, quote, prophetic economist, unquote. Here is a piece from December 2016, about a year ago. Several noted economists and distinguished investors are warning of a stock market crash. This was just after Trump was elected, although he hadn't yet been inaugurated as president. Jim Rogers, who we know is one of the most successful investors of all time. He founded the Quantum Fund with that arch-communist, elitist George Soros. Rogers went apocalyptic when he said, quote, a $68 trillion biblical collapse is poised to wipe out millions of Americans, unquote. How did he come up with this number, exact number, 68 trillion? Not 65 or 70, but 68. Mark Faber, who I can tell you writes the, the Gloom, Boom and Doom report or something like that. Bearing in mind, I write the Booms and Bust report. I don't charge for it, and if you're not getting it, you should send me your email. And I, of course, have the Booms and Bust show. Well, Mark Faber has the Gloom, Boom and Doom report or something like that. And they said Dr. Doom himself recently told CNBC that, quote, investors are on the Titanic, unquote, and stocks are about to, quote, endure a gut-wrenching drop that would rival the greatest crashes in stock market history, unquote. And the prophetic economist Andrew Smithers warns, Smithers? Is that Mr. Burns' assistant in the nuclear plant? Smithers? US stocks are now about 80% overvalued. This was December 2016, let me remind you. Smithers backs up his prediction using a ratio which proves that the only time in history stocks were this risky was 1929 and 1999. And we all know what happened next, don't we, children? Oh, no, we don't. Oh, yeah. Stocks fell by 89% and 50% respectively. Even the Royal Bank of Scotland says the markets are flashing stress alerts akin to the 2008 crisis. They told their clients to, do you remember this? Sell everything, because in a crowded hall, the exit doors are small. Blue chip stocks like Apple, Microsoft and IBM will plunge. Well, to say they got it wrong is the biggest understatement of all time. And I remember just a I don't know, a couple of weeks before that, I actually put my clients materially more into global equities. While all of this nonsense, all this rubbish was being thrown out by the media, by the pundits, by the elite. Why? Because they wanted everyone to sell so that they could buy. Isn't it always the case? And I can remember a client saying to me, I accept your recommendation, but aren't stocks very highly valued and aren't they going to go down? And my response was, well, anything can happen, but the charts, in other words, the technical analysis, is very bullish. And we've been in a bull market. This was, as I say, this is November 16. And I said, we've been in a bull market now since the early part of 2016. And post the presidential election, there's been no crash. In fact, there's been a strengthening. We need to get on board much bigger than we already were. So we did. And that particular fund, I think, went up about 35 or 40% over the last year. So that's the first thing that's happened that we should talk about in 2017. Stocks remain in a bull market. They've been in a bull market since the early part of 2016. They had a minor bear or a correction in 2015, maybe from the second half of 2014. And yes, it was, we're talking about 15% fall. And I was indeed bearish stocks. Up until early middle of 2016, we were strongly bullish government bonds. Indeed, going into 2016, we were 60% of portfolios in US Treasuries. During 2016, we went down to 40 and then down to 20% of portfolios. So we locked in very sizable gains on those government bonds. But we've seen an amazing change since early 2016. That's 2 years ago now. We've moved from deflation to inflation. We've seen oil more than double. We've seen energy stocks go up above 50% in the period, 50, 60, 70%. We've seen emerging markets go up nearly 100%. There have been great changes from the bare disinflation, falling inflation, deflation, whatever you want to call it, from about 2011 to early 16, to early 16 to now. And the thing is, listener, that we've seen from early 16 to now, there's nothing on the horizon to reverse it. So when you read the Money Weeks and what's that other one called, the Daily Reckoning, and Mark Faber and Mike Shedlock and Peter Schiff and Zero Hedge, Russia Today, when you hear them saying we're going to hell in a handcart, I'm talking about in the economy and in markets, remember, they are not there to educate you. They are there to sell audience, sell adverts. They are not there to manage your money. I have no agenda here. I don't do a podcast because it makes me money. It costs me money and it costs me time. I have no agenda. I'm not selling you a subscription. I'm selling you nothing. I even give away the Booms and Bush report for nothing. So, you can take with a massive pinch of salt what I say about markets. I really couldn't care less. And if you don't want to listen to another show, I also couldn't care less. But I'll tell you what. When I did these podcasts for a few months in the first half of 2016, and when I restarted them in the early part of 2017, I've had basically the same message. In the very earliest part of 2016, I was saying we're still in deflation and there are problems. But I was also saying, but you know what? Oil looks as if it's picking up. This is a potential game changer. And I was saying emerging markets are looking good. This is a potential game changer. And when I left the podcast in May or June of 2016, I was starting to turn bullish. And indeed, when I picked up on the show again in March this year, well, anyone who's been listening has known that I've been bullish all year. On inflation, on equities, on the economy indeed. And there's nothing on the horizon to turn that around. Now, does that mean that it can't suddenly reverse? No, of course it could suddenly reverse. I repeat, there's nothing on the horizon suggesting a reversal. Whereas I take you back to late 2006 and 2007, just go on to my media channel on YouTube, go to my earliest pieces, or go onto my website, jonathandaviswm.com, and go to my earliest pieces. I was Mr. Doom and Gloom out in the public sphere. People were laughing at me. Did I care? Did I? Hell, I was saying there's a great problem out there. We are going to see a crash. And eventually, the end of 2007, we saw Northern Rock go down. And that was just the first event in the public sphere where they actually started wondering maybe if this crazy Scots guy working from his little office in Hertfordshire, maybe actually he's onto something. And of course, through 2008, still the vast majority of pundits were saying nothing to worry about, don't worry about it. And yet in February, March of 2008, you saw Bear Stearns, the fifth largest investment bank in America, one of therefore the biggest in the world. It had to be taken over by JP Morgan. It went from $170 to $2. It was about to go bust, obviously. Morgans took it over, and still, with something like that happening, still the red braces, the bow ties of the world were saying nothing to worry about, move along. Well, I wasn't. But there's nothing on the horizon. The only thing that in the medium term that I'd suggest to you could be a catalyst for a reversal, both in the economy and markets, is, well, I said last week that it was very likely that the Fed would raise interest rates a couple of days later, and that's exactly what they did. The Fed fund rate is now at 1.25%. Only a year and a half ago, it was 0.25%, and indeed a little bit before that, and it was 0. So it's gone up 5 times in 2 years, although there was a space of a year between any movement. So actually it's gone up 4 times since and including December 16. We're now at 1.25%, and that still is not a problem for markets and the economy. However, you will find as we get to the end of 2018 into 2019, we're likely to see 2% Fed's fund rate, maybe even 2.5%. Then you start getting into the realms of this is starting to create problems for the economy and for markets. But there's nothing on the horizon for 2018. That's what I'm trying to say to you. So what's looking good still? Oil, depends on your point of view, of course. $26, February 2016. Today, $55, $60. It could pull back to the low 50s. I've said that for weeks. I don't care if it does. It's heading to $75 by early 2019. 26 to $75, practically 200% rise in 3 years. If that isn't inflationary, I don't know what is. Global energy stocks, listener, global energy stocks. Lumber, copper, hugely inflationary, also very deterministic in relation to, if you know what copper and lumber are doing, you've got a good idea of what the general economy is doing. They're hugely bullish. Emerging markets do well when copper and oil do well, although by no means are they required. Emerging markets, Brazil, Russia, India, China, South Korea, South Africa, very bullish indeed. If oil's doing well, oil is doing well. Russia, certainly. Brazil, certainly. Emerging markets, they had 5 years of a massive bear market. 5 years. The fund we use has gone up about 100% since early 2016. Fantastic. And I tweet about it all the time at Jonathan Davis, where the O is a 0. In fact, I don't know if it's still my pinned tweet, but it was. But I was looking at emerging markets for month on end, and I was saying it was likely to get to $18. This was the Franklin Templeton Emerging Markets Investment Trust, and indeed, when I first tweeted about it, it was, I don't know, $10 or $11, and that was months and months and months ago. And sure enough, it got up to between $17.50 and $18. If it goes above $18, then I'm telling you, it's a huge, huge bullish indicator. Huge. Because that $18 is actually the resistance point for the multi-year downtrend which started in 2011. I wouldn't necessarily be putting a lot of money in it just now after such a big rise. A correction is due at any time. But if it slices through $18, particularly if it does so, then pulls back and retests 18 and then goes back up on its merry way, wow, that will be a hugely bullish indication that emerging markets are in a multi-year bull market, which again lends credence to the idea of rising inflation for many a year. In a similar vein, in China, a sector I particularly like are the Chinese equivalents of the Amazons, the Googles, the Ubers. So you've got the likes of Tencent, JD.com, obviously the best named company in the universe, Alibaba, Baidu. If you get involved with the Chinese internet stocks as a grouping, there's an ETF for it. I'm not going to do all your job. You can go finding it. Again, it's had a great run. And so long as China continues, the Chinese internet stocks are going to do fantastically. And in fact, there's every reason to expect they're going to do fantastically for the next 20 years. In a similar vein again, not something that I've been investing in, but I really want to, is robotics and AI. Why be concerned about the economy? Why be concerned about your own financial position? Why be concerned about how robots are going to take over all the jobs? Just invest in them, and then you'll be part of the in crowd. There are a number of robot and AI ETFs. Do some research. I'm telling you, just get involved and hold on to them basically for the next 100 years. Greece, I've said before, I've spent a couple of shows talking a lot about it. Greece, of course, economically is a basket case, but China is pouring vast amounts of money into Greece because of the Belt and Road Initiative. Greece will be the first port to receive transportation of Chinese goods by sea into Europe. At the northern end, you've got Rotterdam, which will receive the rail transportation, which passes via Moscow, but Greece is the first sea entry. It stops off in East Africa from China and then hops over to Greece. Greece is so cheap to invest in. Do I know that 2018 is going to be a great year for Greece and Greece banks? No, I don't know it. But there is strength there. And in the medium term, whether it's 1 year or 2 or 5 or 10, the Greek banks and Greek stocks are just going to do incredibly well. I'm reminded, actually, I read a couple of weeks ago that Howard of Brevin Howard, one of the most successful hedge fund managers of all time, is setting up a $500 million fund to invest in Greek shares and Greek property. And quite right too. And we're fully invested in that market. On the subject of we're in a bull market, listener, look at the chart of the FTSE there. It shows that in 2016, right at the end of last year, the FTSE took out 16-year resistance at about 7,000, 7,100. It got up there in 1999, 2000. It got up there in 2007. It got up there in 2015. It got up there in 2016. It finally broke through at the end of last year. And so long as it stays above 7,000, 7,100, then the FTSE is in a bull market. And I can tell you, it tells us a lot about what's going on in global developed markets. Look at the Nikkei. And I want to spend a little bit longer on this. This is very interesting. The next chart. This is a very long term, it's a generational chart. And we know that Japan went into massive deflation. I've talked about it often enough. Incidentally, what you might not know is that with zero interest rates and zero inflation for some 20 years, Japanese house prices fell 60%. More indeed in Tokyo. So, this idea that 0% borrowing is great for house prices, total arrant nonsense. In fact, perhaps for another show, but the time to buy property for the long term is when interest rates are at their highest and that they're likely to fall for a generation. Just look at how much vast money people have made since the 1960s and 1970s in particular. Anyway, look at the Nikkei. You'll see in that bowl-shaped formation that it's practically back to where it was in the 1990s. That in itself is an important step, of course, in the rehabilitation of the Japanese stock market. Now, it has, of course, gone up leaps and bounds since the early 2000s. Fair enough. That's not actually the most important point. If it breaches that horizontal line, and by the way, this is the Nikkei in dollars. It's the hedged Nikkei. And there are funds out there where you can hedge in dollars. So whatever is happening to the Japanese yen and its vast depreciation, you're hedging against that. So it's all very well, if you buy into the Japanese stock market, but you're buying it basically in yen, the stock market could go up, but the yen could go down. you make no money. But imagine if you were to buy into the Nikkei and you could hedge against a devaluing, a debasing, depreciating currency. You could actually capture the true nominal gains of the asset. Let me tell you that I think it was the early 1990s, Israel had massive inflation, 500% per annum inflation. The inflation went straight into the stock market. The index went to something like 1 million. Imagine if you'd been invested in the Israeli market when it started at 20 or 30,000. And imagine if you'd been able to hedge against the debasement of the shekel. Imagine the Nikkei going through the roof because of inflation. And why might there be inflation in a country which has had massive deflation for a generation? Because the Japanese government finances are totally, utterly shot to pieces. They are printing money with abandon. And they've got a bit of inflation now. And it's amazing, once inflation takes hold, you cannot put it back in its pen very easily, as this has been proven time and time again in Weimar, in Venezuela, in Zimbabwe, indeed in Israel. Do you know, it's amazing, but what was the second largest economy on the planet could be the next Zimbabwe, the next Israel. This is absolutely serious. Because they're printing money hand over fist, because their social welfare is so high, because their number of retirees is absolutely massive. So they're just printing money left, right and centre. They're debasing their currency, folks. I see no reason, unless something changes, why Japan couldn't go hyperinflationary within the next few years, starting from today when it's only got 1% inflation. And when I say hyperinflation, I'm not talking about 1970s style Western inflation, a la 10 to 25% inflation. No, I'm talking about 50+% per annum inflation, 100%, 200%, 500% inflation. Yes, it's entirely possible. And it's entirely possible that that Nikkei chart is showing us the way. And if Japan goes inflationary, hyperinflationary, then the Nikkei chart will go hyperinflationary. And imagine if you capture that by hedging. You could be looking at 1,000x on your investment. What about 10,000? Who needs cryptocurrency? Other asset classes, government bonds, they're flat to bearish, entirely in line with the inflationary hypothesis. At best, you should be neutral on government bonds. While the trends continue, you should not be adding to them. The fact that very short term they've come up a bit, medium term they look bearish, longer term we don't know yet, but medium term they look bearish. Gold, silver, platinum, they're in downtrend until proven no longer. Look at this next chart. I've just been talking about the yen, and look how over the last couple of years the yen has come down a lot, and gold has come down, and government bonds are flat at best since 2016. And put them all together, and All Star Charts has done that, and he's called it the safety index, because when risk goes off, money flies out of the dollar into the yen, into gold, into US treasuries. Put them all together and in an equally funded index, they're in a downtrend. So we are clearly in risk on. I would say, as I read it, the dollar is difficult to call. Some people, like indeed All-Star Charts, is bullish. They're bullish on the dollar because the commitment of traders, the commercial traders, in other words, the smart money, is heavily long the dollar. However, it's been trending down all 2017. We'll have to wait and see. I'm in neutral at the moment regarding the dollar. I wonder if money that would otherwise have been flowing into gold this year while the dollar collapsed, I wonder if that money has instead gone into Bitcoin. I would say, relatively short term, that for the last 4 years, December, January and February have been super bullish for precious metals. However, we don't know. There's a 10-year or so chart of silver, or the ETF for silver, and I find it very interesting. We've got a very strong wedge there, and we're coming to the apex or the vertex, and it shows very clear support and resistance. Below about 15 is support, and above 16 or so is resistance. You pays your money, you takes your chance. We'll see. There's a long-term chart of gold mining stocks. It shows that miners are at as low as they were after a multi-year, multi-decade bear market back in 2000. And the ratio, this is the ratio of gold and silver stocks to the S&P 500. The ratio stands at the same level when gold was only $300. Well, gold today is about, $1,250. So surely miners should be 4 times the level that they are in relation to the S&P. But no, they're not. Something has got to give. What's interesting is that back in 2000, 2001, we had a 10-year bull market after that. And miners went up, 600% on the indices. A massive bull market. Moving on to natural gas, which is an interest of mine. I mentioned commitment of traders there. You see in the lower chart, the red is the commercial traders, the smart money. They're at massive longs, massive, compared to the last few years. Whereas the hedge funds, the large speculators, are massively short. Well, the price, as you see, has been largely flat for the last couple of years. It seems to me the commercials will not just swing it, but they will push it to the moon, perhaps up to $4, which is a massive rise for gas, and it will affect, therefore, gas and general energy stocks. Talking about energy, I've talked a fair bit about uranium and uranium miners. Since I talked about it, we've had another major announcement of a supply cut. Kazakhstan, which is by far the biggest country producer of uranium in the world, announced in early December a massive cut in production because the price of uranium was just uneconomical to actually dig the thing out of the ground. So in January this year, we saw a big cut in Kazakhstan production. Immediately, the price of uranium and stocks absolutely trampolined massively. But then through the year, they both came back down again. In November, we had Cameco, by far the biggest private producer of uranium in the world. it decided to take out 10% of all global production of uranium in the world. And that had a positive effect on uranium and mining shares. Then Kazakhstan, 2 weeks later, again, the second time this year. And in fact, there have now been 19 major supply cuts since 2011. Fukushima, the peak of the uranium market. Since Fukushima, you've seen uranium go down from $130 a pound to circa $10 a pound. Do you know where we are now? Getting on for $25 a pound. Let me tell you what's going to happen long term for electricity demand. The US typical household power consumption is 11,000 kilowatt hours a year. In France, it's 6,500. In the UK, curiously, it's 4,500. 1 Tesla car uses 5,500 kilowatts hour per year, based on 12,000 miles a year. 1 Tesla car uses more than the average UK household. Can you believe that? As they say, either the price of uranium goes to the moon, or I'm telling you, the lights will go out. 20% of American electricity comes from uranium. They are building more, vastly more, nuclear power plants today at probably the end of a huge bear market compared to the end of the prior bear market, and that bear market created thousands of percent rises in some mining shares. And they're building far more nuclear power plants today. If you've got nearly $25 a pound in uranium today, I really imagine we're going to have $150 to $200 by 2025. You're looking at 10 to 20x on uranium miners' funds. Maybe 30, because some of these juniors are going to go up 100x. And let me tell you where we are in the market. In 2011, after Fukushima and a massive increase in uranium supply, so on the one hand you had a massive fall in demand, and on the other hand you had a massive increase in supply of uranium, so of course you're going to get a big fall in the price of uranium and a big fall in the share prices of mining companies. In 2011, the ETF for uranium miners, the biggest ETF, URA, went down 60%, 60. In 2012, it went down a further 19%. 2013, a further 22%. In 2014, a further 23%. In 2015, a further 37%. So by the end of 2015, in the space of 5 years, you had something like a 95% fall in the uranium mining ETF price. In 2016, you had a further fall of a massive 1%. In other words, in 2016, the prices were basically flat. And in 2017, they're up 25%. Now you just think about the chart, thinking top left to bottom right. Massive steep slope down, 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 flat, big up. Hockey stick style. And do I know that 2018 it's going to go up another 20 to 50%? No, I don't know it. It could go down. But it seems to me that over the next several years, you're looking at massive, massive rises in uranium miners. And if you're not in it, you're not going to win it. Who needs crypto when you've got uranium miners? A traditional asset which is massively demanded by the world, and it's there for the taking. The prices are dirt cheap. They're there for the taking. I want to thank the 13 people who in the last week retweeted last week's show, which equaled the largest number of retweets for a podcast. 13, thank you so much. I know basically it's the same guys who do it every week, but I appreciate it so much. I had hoped we might have got 15. We got 13. 13, still great. Thank you so much. The thing is, I believe that thousands of people, tens of thousands of people should listen to this show for the politics, for the economics, and for the retirement planning. I'm not giving advice on this show. You know, you cannot take me down the law because it's advice. No, I'm simply giving you a generic opinion, and I'm looking at the charts and I'm extrapolating. It's not advice. So don't go down the route of, oh, you said, therefore I'm taking you to law. No, it's nothing to do with that. So, you know, that's the legal caveat. There's no advice. But I do believe that thousands, indeed tens of thousands, should listen to this show. Approximately 600 people or 600 downloads per show happens. Now, most likely one person at a time listens to it, but if they're listening in the car, they might have one or two other people in the car on the commute to work. If they've got their headphones in the train, then obviously it's just the one. But I do know a few people who have their spouse and a mate round to listen to this show round the house over a beer. Fantastic. I'd love to be there myself. What's wonderful is that we now have one of the podcasts earlier in this year which has over 1,000 downloads. Absolutely fantastic milestone. And indeed, there's 3 others who are pretty close. So, you know, over time, we're getting a 4-figure number listening to the show, which is amazing. It tells me I'm possibly doing something right. But if you could please retweet, I'd be most appreciative. I'd love to get 15 retweets of the show. Quotes of the week. Been very much a markets, finance, investing show this week. So that leads me to the great Woody Allen. Money is better than poverty, if only for financial reasons. And this is a great philosophy. Don't worry about people stealing your ideas, says Howard Aiken. If your ideas are any good, you'll have to ram them down people's throats. Because as you well know, if you've got a good idea, most people poo-poo it. And finally, for 2017, I see that George Orwell, who wrote, of course, The Road to Wigan Pier and then the absolute amazing 1984, which told us exactly what was going to happen, and my God, how true it's coming, and it is terrifying. They've just found posthumously a new Orwell novel. It's amazing. And if you look at the tweet, you'll see what it's called. And there it is, exactly in the design of how he published the paperback in the 1940s. I'm not going to tell you it. You're going to have to go to the tweet and you're going to have to see it for yourself. Listener, I have had an amazing year podcasting the Booms and Bust Show to you. Thank you so much for being there and listening. And I truly have had a blast all year. I'll let you know on Twitter in January when I'm coming back. I wish you and yours an amazing festive season. Have a great new year. I've had a blast. I'll see you next year.